Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Happy nearly Friday.
Nearly Friday, nearly the end of the year. Feeling a little bit D-Mob happy.
Yeah, you mean the end of the year in the sense it's your summer holiday?
Yes.
Yes.
It's kind of our kind of year kind of rolls on a from summer to summer type thing.
Right. Okay. Yes. No. Yes. It's same feeling for me. I'd love to say I was winding down, but I'm not in any way, shape, or form winding down. I'm like, I should not be going on holiday. I mean, if anybody saw what I've got to do, they'd ban me. And
Yeah.
so I'm afraid, Ben, we've had an investigation, and you've got too much work. You can't go. You've got to stay here.
Way of the world. Got to take a break. Got to take a break. Hello, everybody, and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. This week, we're going to start off with the news, a couple of bits there, and then we're going to reflect on some of the kind of key themes or conversations or bits of research that we've noticed over the last sort of few months since the turn of the year. And see if we can predict where they might take us in the near term. Let's start off with a bit of news first, then. Ben, shall we do P&C rates first? Let's do that.
Okay. So, obviously, the market is softening. Rates are coming off, and this is the it's a carrier management report article on the Swiss Re annual report, maybe 6-monthly report on premium forecasts and what's happening in the rates. And we really want to run through some of this stuff because it's good to get halfway through the year. We've all been talking about a softening market. Is it really softening? How much is it softening? Are rates coming off? Is it really that competitive? Well, what this report says is that there is still some good news. I think the Swiss Re report says sunny skies, but bringing umbrella. That's their conclusion. So you kind of get what that means. And that's not about your holiday, by the way.
Probably will be.
But it is, maybe. So commercial lines has had a really good 4 or 5 years, as we know, had double-digit growth, was in 21-22. That is dropping off. So it's gone from 10% growth to 24 to 7% in 25, expecting it to go lower. So their conclusion is that insurers are assessing the pricing to be adequate. And now, as a result, they are looking to grow market share. So essentially saying that competition is increasing for existing market share, everybody fighting for the business. Interesting quotes, good times create the conditions for their own demise as companies compete for market share. So what they're saying is the rates come off, everybody competes, and that could be the end because you're writing a lot of rubbish business at the wrong price, at too low a price. So we could see people come a cropper as well. The combined operating ratio 2024 was 97.2. They're now saying it goes to 98.5 for 25 and 99 for 2026. Now, on the kind of vast market that they're looking at, it's still got some profit in there, some margin, obviously quite tight, but it allows for a little bit of growth. In markets like E&S, that is also dropping off. So premium growth has dropped below 10% for the first time in the last 5 years. And that was going like a train, if you remember that E&S market out of the US. So even that specialty stuff's coming off a bit. Very competitive. It's really moved from headwinds from tailwinds, I think is most of the narrative. And a quote, you get the greatest feeding frenzy around the largest accounts early on in a competitive market cycle. So there's this sense that actually there's a bit more, there's a bit less kind of drop off in the more standard, less volatile classes, but in the bigger risks, the bigger accounts, that's what's being fought over by the carriers. So it's going to be really competitive going forward, I think, without doubt. I mean, you can look at rates, and then you've got to look at what's the behavior of, a big insurer. And I think this is what I'm hearing all the time is, we need to grow and we need to win and we need to beat the competition because the pie isn't getting necessarily that much bigger. And that's for sure now the case. And we're fighting to keep business as well as win business and grow share on lower rates. So not good. Kind of drivers of why the rates are lower. California wildfires have happened, some storm activity, higher capacity, competition, and investment yields are also down. So generally speaking, all the indicators are toward more competition and quite tough. There's not enough claims to raise the capital requirements, or reduce the amount of capital available, but there's enough to sort of keep it so they're still paying out claims. There's a bit of a drag on it, but higher capacity and competition and investments down. So it's classic, in a sense, kind of a classic soft market. And it's what we're going to have for the next few years, I think.
Do you think, just taking that kind of classic soft market line that you said there, do you think that things might change? And we're going to talk about this a bit more, because claims that you talked about, they've got enough money to pay claims. Do you think as the cycles progress that claims will become more important in those buying decisions, and therefore the competition around price might be tempered by buyers really looking for a quality product rather than just buying on price?
Well, if I was a kind of old-fashioned, cynic in the market, I would say no, because the behaviors will remain as they always are. This is fear and greed territory. However, I think that there is a shift towards competition on the broking side to being around customer service, and that's how they're trying to win more business, a real focus on the client and delivering value to the client. And I think technology is helping there. And I think things like claims, therefore, are coming into play much more, because it's obvious if you talk about service, then claims has to be there. The difficulty, I think, and I said this the other night at the event that you were at, our claims event, is that claims is in a kind of difficult, it's always been in a difficult territory of how does it deliver value? Getting over the sensitivity of talking about the potential for a claim at the point of selling a policy. I mean, common sense tells you that that's not exactly what salespeople want to talk about. It's more difficult. It's easier just to say, get the policy and you're safe type thing, and sell on price, rather than, as you're suggesting, selling on premium or value. But I do think that will be pushed a lot more. And I think there's the chance to do that. There are still, though, very strong forces against that happening. Just because it's always been that way, and culturally it's that way. And, it's hard to change attitudes, I suppose, in a way. Do clients clamor to get claims data or information? Probably not most of the time. It's not high on their agenda in the risk transfer space. They just want to get a decent price and think that, deal with the claim when it happens.
Yeah. Okay, very good. Well, we'll reflect on that as we get towards the end of the year, and we'll have the whole 12 months.
Yeah, I mean, I just had one thing to that just before we finish. I do think that it might, we're talking about growing business and using it as a selling tool, but it's arguably, and I should have said this, it's arguably a better retention of business tool. So in a soft market, you do absolutely need to retain business. I mean, the worst thing that can happen to an insurer is to lose established business that it's got, because that's in the bag, no low cost, in a renewal. Same for the broker. They don't want to move it all around. So you are in a great place when you've got a big account that is delivering. I think your risk is, and we've talked about this quite a lot at Grace Church, about it's the downside of not doing the job well on claims or taking a stance that causes you to lose business.
Yeah.
And I think that's a real risk. So I think that's where it probably counts more at the beginning.
Yeah. Almost that kind of reputational risk against you, if you make those wrong calls. If we look back over the COVID times where, there was some questionable claims judgments made, that did have an impact on brand, although I think most of them have been able to turn it around.
You did, and I think it certainly had an impact on some of those players on their profitability for quite a few years. Now they may argue other things were causing that, and it was post-COVID, so it's difficult to put your finger on exactly what it was. But I suspect that they lost some chunky business at that time because of that. But a lot of those were SME claims, but there were some big court cases as well about some very large, retail companies, hospitality companies that were fighting the insurers. So I think that won't have done too much harm. I mean, they were lucky, those businesses, to some extent, because the business became so good, which is why we're showing those P&C stats. I mean, the market grew, the cycle was in their favor after that. I think if it had gone the other way, it might have been a different story for some of them.
Yeah, definitely. Good. Right. Thanks for that, Ben. Kicking us off this week. We wanted to also touch on another area, which is kind of jobs. So we've been talking quite a lot over the last 6 months, 8 months, about kind of the roles within insurers, the changing world of work. After COVID, we've just been talking about the return to the office or not, and hybrid working and the impact that's had on organizations and organizational culture and innovation and things like that. So I think this is an interesting time to kind of bring up this report again, Ben, from the World Economic Forum and the
this is Davos, or AKA Davos, but it's the organization that organizes Davos. This is the kind of premier jobs report, and it's very good. I must say, it's a really, really crackingly good report. If you're someone like me who likes a bit of stats and a bit of analysis and narrative on big issues, and I'd actually recommend reading it. It is really quite interesting. So really, this tries to look forward. It looks at where the current status of jobs is, what's going on. So a lot of the indicators here won't be surprising, but they are kind of numbers-wise interesting. So really, the big trends that they're picking up here in relation to jobs are, and this is business performance, is a sort of broadening digital access. 60% of employers are expecting it to transform their businesses. So there is a lot of tech stuff going on in the thinking in business at the moment, and that's the kind of biggest driver, followed by cost of living crisis. That will affect a lot of businesses in terms of how they price their products and services and demand. Climate change mitigation. So this is really around green energy and offsetting things and so on. But jobs like renewable energy engineers, those sorts of people. So I think this is kind of the fitting up or the fixing up of things we've already got, in place. I suppose solar panels, heat pumps, all that sort of stuff that are being done, as opposed to kind of net zero type stuff, I suppose. Those are the main ones. So then there are sort of demographic shifts that are affecting this. So we've got really big combinations or differences around the world of both aging populations and declining numbers of people in working age in some societies, including ours. So that's the other thing. And then you get sort of younger populations, mainly in the kind of lower income economies, and there you get a real drive for skills in kind of talent management, motivation, kind of kind of whipping youngsters up, I suppose, to inspire them to do stuff and helping them. Whereas actually aging populations, all the jobs are, of course, health workers and all that sort of stuff. So that it makes the profile of these societies, if you look at it globally, quite imbalanced. And then we've got what they describe as geopolitical fragmentation, but to us is really politics in a way. Everything to do with tariffs, Trump, restrictions on trade. I think most of this, as they say, is coming from any business that deals with China or the US, which is the big economic battle. And there is within all of this a drive to offshore stuff, interestingly. So businesses starting to say, well, we'll move our headquarters or our business around to avoid the problems that we're getting from, say, tariffs. Now that then in turn drives a lot more kind of interesting security type jobs, including cybersecurity, where they're looking to protect supply lines, systems, technology as they move into territories that perhaps they don't know so well, or maybe not quite as safe, I suppose. So those are the kind of trends. They reckon a net growth of 7% in jobs overall, and frontline job roles expecting to see the largest growth. Farmers, delivery drivers, surprise, surprise. There's probably quite a few come to you, isn't there?
Yeah.
Deliveroo.
I've never done a Deliveroo. We were talking about this in the office. I didn't actually know what it was.
Uber delivery? No,
never do. I don't really. I find it too expensive to get takeaways. I'm tight like that.
God, I'm always getting them. I think I'm therefore keeping them going, not you.
Not me.
Salespeople, construction jobs, all that sort of stuff. So lots of what we just call frontline jobs. The fastest growing, that's the largest growth is in those jobs, but technology is the fastest growing percentage terms. I didn't look at why that was, but anyway, they're both fast, I guess. So big data specialists, fintech engineers, AI, machine learning people, and then green energy roles, things like EV specialists, environmental specialists, and so on. So those are the jobs that your kids should be looking at. And largest decline in clerical and administrative roles. So if you've got an EA or a PA, it can be a bit tricky for them.
Yeah. And that's quite interesting for insurance, isn't it? Because there is, and we talk about this a lot, don't we? That, the massive manual, still paper-driven, whether that be PDF or whatever electronic paper, essentially. And so you can see that the technology conversation is really kind of driving a bigger conversation about what broker and insurer business and operating models are going to look like in the future. And then what are the skills and capabilities you're going to need in order to enable that model going forward. And if it isn't like lots and lots of people doing admin, then what is it that they are going to be doing, and what are the skills? Are the skills that they've currently got the ones that we'll need in the future, or do you need to retrain them or bring in new people? Or they're quite big questions for an industry that has traditionally been not very good at grappling that kind of strategic level of conversation.
Yeah, and I think I've got a good example actually from something I was doing today. I was going to quote it, which is I'm doing a bit of kind of deathmin, I suppose you'd call it. So I'm just finishing off moving a property, and I've got to register that we're the new owners of a property, and then transfer it. Okay, so this is kind of it, and actually there's two forms to fill out, both of which are quite complicated in rather arcane language. But let's put the arcane language to one side, because that's a whole kind of legalese thing. The The second form I had to fill out was so difficult to understand, and it's trying to do about 18 different things. And what it effectively is, because I've talked to the land registry about it, is an administrative wrap for the first form, which I didn't know or care. But there's a link between the first and second form, basically. Anyway, I got so confused. I couldn't understand what I was supposed to be filling out where, because it's all open-ended boxes. And no digitization really as such of this thing. And you go somewhere else to get a fee thing. And anyway, it's all kind of online, but it's hard to find. And so I rang them up and they said, well, I'll be very helpful. I'll send you an email, which tells you exactly what to do. And they told me a few things. And now I've got an email. So I spoke to this person. Now, what I was speculating on was, would this person's job still be there in a few years' time? Because, or maybe even shorter than that, because it does seem to me that, you know, regardless of my kind of frustration with this, these two forms in this particular instance, AI will pull, I could put them in now and say, could you pull together the key things about this form that I should do, or I should do? And then the AI, if you set it up to do it so that it suits me, will work really well. I could almost press the button. They could say, ask me 5 questions and off it goes. It tells me exactly what it does and it delivers the result to the land registry and off you go. Now, that includes things like ID and all that sort of stuff. And I've been having to use AI to understand the stuff that's they're telling me. So AI is already in play for me. It's become a nice tool to understand what the hell they're talking about. Much of which, to be fair, is lifted from their own site. It's just that the AI finds it, you know.
Yeah.
But that is a huge cost now to economies, really, of people doing that sort of stuff. And I guess that bureaucracy now, you could see AI getting rid of a lot of that and making that easier, or it messes it up and we have an even worse problem.
Yeah. Well, that is the problem. I had a similar experience because my daughter, when she turned 16, her premium bonds turned from it being managed by us as her parents into she now had to manage them as an adult. Yeah. However, in order to kind of make that transfer, they had to use a telephone number that was now defunct because we got rid of our landline about 6 years ago. Yeah. And because you can't change the landline, you can't then get a security password in order to change. So we're in this kind of doom loop spiral. Yeah. And even if you do speak to somebody, they send you out a paper form to fill in, but it's so complicated, as you were saying. It's actually very difficult to know what information they actually need and who should fill it out, myself and my daughter. And, it is, you just kind of look at that and think, surely there is a better way of administering the premium bonds to move. There must be thousands of children every day moving from
absolutely. I mean, I think all of these things, it seems to me, are very huge amount of friction in that system, huge amount of friction, and a huge number of employees and people employed to do that. You will, if you can make it work. I mean, if the government can make it work, if bureaucracies like that in any business or government entity can make that AI work, it will be a big shift. Without question, whatever you think of AI and its future, that stuff is what AI is good at, potentially just pulling together all this crap that, has grown up over time so that there's 15 different forms and it's all in legalese and God knows what. Yeah. It would be a big shift. Now, it could be for the better for people generally if they could understand what the hell they were filling out.
Yeah. And I think, let's switch it back into insurance. You can see masses of opportunity if you're thinking about it in those terms. And I think we're making pretty big steps, actually. From the conversation I'm having and at TinTech and at London Market Claims, I think a lot of the conversations are about, we've tried this, it works really well. It's a lot better than the old manual process. It's not 100%, but it is better. And so long as you put good guardrails around it to catch the exceptions or the stuff that could go really badly wrong, you could get a lot of it flowing really, really nicely and get rid of that drudge that we often talk about on this show. That really is.
Yeah, I mean, I agree with you. I mean, I think that seems to be the area it's going to really make a difference. I think we've got to. Yeah, I think it'll roll out as it rolls out. I mean, the question is, does it make any money for anybody? I mean, taking that drudge out on paper should reduce your costs, but do you redeploy to grow? I mean, the value add side of it, I don't think AI adds a lot to at the moment. I think that's supposed to be people. So yeah, that's the big question, I suppose, isn't it, for everybody?
Yeah, indeed. Good. Right. So there are some of the thoughts on our last 6 months. Any memorable news stories, Ben? Last week we talked about John Neal, and is he in? Is he out?
I think
shaking it all about.
Probably John Neal has been the biggest story in the insurance market over the last 6 months. Yeah, I mean last year really, because it's been his leaving, which was sort of somewhat kind of traumatic or exciting, or whichever way you look at it, and then is not going to Aon, and then going to AIG, and now they're talking about his salary and yada yada. So you've got quite a good long running story there. I don't know what it says about insurance. You can earn a lot of money if you being a chief executive of Lloyd's, I guess.
Yeah, indeed. I think that has been a big story, and I think it's also impacted on. I know we don't often talk about Blueprint 2 anymore. It's kind of all gone quiet over there, but that's unsurprising if you haven't had the leadership at the top that needs to drive this through of one of the key components. Plus there was the whole reset of the project management team as well.
Yeah.
So I think it has been kind of destabilizing in a way. And as you say,
yeah, I think I'd agree. I mean, I think there's got to be something big coming out, hasn't there? From the new chief exec and the new team, and I expect there will be. I think a lot of people feel there should be, and there will be, and there's a general feeling of confidence in that team and in Patrick Tiernan that I haven't really heard before. I think there's always been mixed opinion on who's going in. I feel there's more consensus, which is good, I think. But yeah, it's tough. I mean, there's a challenge there. They're going to be challenged because of those P&C figures on the money front, on making money. So where's, in that circumstance, what's going to happen about the investment in technology? Businesses will be reluctant to do that.
Yeah. Interesting time.
Yeah, I mean, I don't know what else. What other stories do you kind of, or what other things have you kind of noted actually from the last 6 months?
I think that whole kind of discussion that we had at your Claims Social, and that we've been having at generally technology and ops people around some of the service ideas, the leadership, the culture, the talent piece, not just kind of operational efficiency or not just technology and how can we make it work. I think that's really interesting. And so my observation around that is quite a lot of, I don't want to say decisions, but quite a lot of the leadership now is coming from the chief operating officer. So if you look at kind of an AI initiative, you are going to have technology involved in that. You're going to have data people. You're going to have compliance. You're going to have governance. You're going to have a whole suite of people that need to be involved in that in order to make it successful. And it seems to me that the person who's kind of has complete oversight over that is the operations director or chief operating officer. And that's quite interesting, because I think as that role grows, it'll be interesting about how far that reaches, because as AI moves into marketing and HR and finance and underwriting and claims, does that grow, or will there be pockets of, because I think the temptation is that you have kind of pockets of innovation and change, but there isn't kind of this holistic approach. And I think by having the operations director or chief operating officer kind of keeping an oversight over those different initiatives, they can probably try and create the synergies that in the past, when we've had digital technology change, haven't delivered the promised outcomes, mainly because they've been in distinct parts of the business. So I think that's quite an interesting development, I would say, over the last
I tend to agree. I think the whole thing about skills gaps and upskilling now is a conversation that's begun and is rather important, and I think we're seeing that everywhere. That was also in that report really as well, the WF report, which is all about upskilling. Still very kind of crucial. I think that's something that the insurance industry has got to, certainly they've really got to think about now, is what are those different skills sets, because too many people are doing the jobs as if that were done 25 years ago and not doing them too differently. I think there's a veneer of change and superficial change, but I don't think they've fundamentally changed. I think there's way too much focus still on the technical and that prowess or that belief that it's, I'm a technical expert in insurance, but I don't think that's something you're going to be able to hide behind in future. That'll be just table stakes.
Yeah.
So you're going to really have to, even people mid-career are going to have to think about this.
Yeah, definitely. I think another area that we've seen constantly rise over the last few years, but certainly in the last few months really come to the top of the agenda is kind of delegated authority. And that whole kind of area of business, both as a driver for growth, but also as a weight on kind of operational cost and friction. Because coming back to our original talk a moment ago, there hasn't been that strategic, how are we building this DA book? How can we get the synergies to align? How can we decouple growth from the cost base and things like that? So yeah, interesting around DA, that's for sure. And I think alongside that is data, a lot of the Is that your doorbell?
No. It wasn't. It was my Teams. Sorry.
That's all right.
Let me just check.
So we were just talking about data, and I think that's been a big conversation starter. I think, but both in the conversation around AI, but actually, in DA as well. It all comes down to kind of the data you've got, how the quality of it, where it's stored, how it's being used or not being used. And so you've got
the linkage really is that, and this is the opportunity, the weakness and the opportunity in the market is really around data. So the data's weak, you can't do much. You're a bit hamstrung if you want to say, I want to service customers better, I want to service my brokers better, I want to just do stuff. So if you don't have that data at your fingertips, as it were, then there's a real issue there, I think, genuinely for everybody. And that has been the case. I think you're right that there is more of a grip on this now, and particularly I can see this on the broking side as well. That does feel like it can be a lot of it could be automated and so on in terms of pricing, packaging up products and so on, and understanding businesses through those data. So that's a big shift, I think, that's happening as we speak. Probably got a bit of time to roll out. I think in some of the spaces though, like the claims space and so on, it's very, very kind of haphazard and still very poor. A long way to go there. But the focus is coming onto it, yeah, for sure. Yeah, because I think what's happened is that quite a lot of businesses, and this is classic insurance, they've gone down the cost efficiency route and said, let's outsource, and then actually not really set any standards for that, not really set out how they're going to operate with those TPAs and things. And I was talking to a client the other day and their team saying that they have established these firm kind of ground rules and foundations for how they operate and work beyond your standard SLAs, and their opinion was that most insurers have not done that. Now, that may be just them being so, but I think they're right. I think very few have done that, and they're going to have to do it. You know, they're going to have to backfill all that. So I think DA has been, and will continue to be a big, big issue.
Big issue. Okay, good. So a couple of other bits. Just wait to bring in Ben. And this was obviously a massive weekend of sport on Sunday with Lioness is winning the Champions League, not the Champions League, the Euros. That's what I'm trying to say.
Yeah.
And at the same time, which was annoying from a scheduling point of view, we had the final stage of the Tour de France. I actually had 2 screens on, trying to watch both. But that was also fantastic. And congratulations to everybody. Tadej for winning the Tour de France. And
I don't know about you, but when I have a day like that, when all that stuff's on at the same time, I feel a bit empty the day after.
Yeah, I know. I do as well.
I'm thinking, I wish they could have spared, sort of spaced this out over a couple of weeks.
Yeah, it would have been great. And also it may be very sad because this is the last time that ITV are going to do their coverage. Whether I can't remember what the story is, but I really look forward to the coverage. I think it's refreshingly brilliant, and it's been a kind of staple for my for my summer. So I'll be sad to see that format go.
It is sad. I think you have to go then onto something like TNT or something, which is now paid for, and I think they've again, you have to pay for it, which I think is a bit outrageous.
Yeah, I do as well. But I think you never know. Somebody on a white horse might come and put it on YouTube or something.
Yeah, well, you can get it there, can't you? But this year has been quite difficult to get it on the day as a rewind. But anyway. But I agree with you. It's the end of an era. It's a real shame.
Yeah, it is indeed. So Ben, come on. Tell us what you're going to be reading on holiday.
Oh, reading on holiday. Oh, well, watch out when I come back. Because AI is a con. The AI con. Here you go. That's what I'm reading.
Fight. Big tech's hype and create the future we want.
Yeah, this is what I've already started. This is pretty good. It's really makes you think. But what I think it's going to do for me is give me all sorts of ammunition against you and your hype. You're probably reading why there's 1,000,000% certainty that AI is going to be a success.
Yeah.
The future is AI.
I am getting worried, though, that all the companies, and I think I emailed you this, but all the companies are determined to make the Terminator film a reality, because every time they release a new version of their whatever it is, AI thing, it's called something like the DW3242XC-Thinker. And you're just going, what? Why?
There's a commercial problem with AI, I think. And it's this. They're all fishing for the data in the same pond. And we've talked about this. And they've got slightly different models. But we know, technology eventually comes a level playing field because everybody's got it. So the real differentiator will always be, have you got better data than someone else? Have you got unique IP? Have you got that? If you haven't got that, I don't really see how AI can keep on growing its revenue, and its profits. It just seems to me that it's potentially a one-trick pony. Now,
Yeah.
I said earlier on, it can do all that administration, but is it taking us into new territory where we can do things we couldn't do before with computers? I'm not sure it is.
Well,
So,
that'll be something to discuss in the autumn.
I've not even read the book yet, and I'm already on. Yeah,
Oh,
I'm already killing it.
Yeah, brilliant. Good. Right.
I think it'll be fine. I mean, I think it'll have a go. I mean, but anyway, I'm going to read that not on the beach, but in the mountains of Canada.
Good. I'll read something. I haven't really thought about it. It still feels a long way away, Friday, but yeah.
Well, I've got some other books I've got to go and read. So there's some I'll read some books about. I'm going to read one about China.
China.
Yeah, I've got a book to read about China.
Okay.
Because I don't understand China really. And there's a book which is about the father of the current Chinese premier and what he went through, and that apparently is that reading that gives you a good idea as to why they're doing what they're doing. So
a bit like Oasis and the Gallagher brothers.
Somewhat
similar.
I mean, I haven't read it yet, so I don't know. I've not even bought it, but I might buy it. I might take that on as a tough read.
Tough read. All right, good.
Might not get very far with it, but we'll see.
Especially if it's written in Chinese.
No, it's not in Chinese. Obviously, it's in. I mean, I could read it in Chinese, obviously, but it's not in Chinese.
Yeah,
it's English.
Okay. Good. Okay, thanks for tuning in, everybody. We will be back in the autumn, following our summer break with more of the same stuff. Ben will be battling against me on the AI hype bus.
Yeah, and I'll explain China in just one show.
Yeah, just one segment of one show.
Yeah, good. I won't do it. You don't need the whole show, do you, on China? No.
Nah, you're fine. Good. Right, thanks for tuning in, everybody. We will see you in a month or so. Goodbye.
Have a great holiday if you're going away, and a great summer. Bye.